Welcome to Alpha Bytes, where each week you get a behind-the-scenes peek into crypto researchers doing the dirty work to find tomorrow's alpha. I'm your host, Marconi White, and today's show is tastier than the 20-hour brisket JJ just pulled off his smoker. I'm going to ask the guys, what's the killer app for crypto? But first, JJ explains why it's now or never for Bitcoin. We ask and answer whether Polygon is a beta play to Ethereum. King Cody likes or spikes 3 projects, including an ETH ETF launch, Frax entering the real-world asset space, and Monad announcing the most performant EVM to date. And Ray explains why the Bitcoin halving is probably different this time. I'll guarantee the answer will surprise you. I've got Ben Lilly, JJ, Ray, Cody in the studio. Gentlemen, welcome. Glad to have you here. We're going to kick it off with the market update. But first, exciting news. Yes, after weeks, well, it probably feels like months, next week will be our first video show. That's right, you're going to see our faces, the charts, the graphs, everything you need to put everything together and think about how this fits into your portfolio. So hit the like and subscribe button to know when it's coming out. I promise it's going to be worth the wait. All right, let's turn it over to the market update. JJ, I'm going to bring you up here. Last week, it was all bears in the studio. Since then, BTC ripped above 28K. Tell me, did you have the right call or have things changed?
Well, it's now or never, as you said in the lead there. So to address the elephant in the room, we have DXY that's obviously still on a tear here. And it's shown 0 signs of slowing down. There's severe stress in bond markets, FX markets right now. And that's obviously causing some downward pressure on BTC. The glimmer of hope there is that we did get that big rip over 27.5 that I mentioned last week. Currently, it's retesting that. It went directly up to the 200-day moving average at around 28,000 and change there. And that's really kind of the next line in the sand where we could say things are back risk on. Perhaps that death cross was invalidated, but we haven't gotten that confirmation yet. And where DXY at the levels it's at, the downside reversal could come rather quickly. At the same time, there is that glimmer of hope, is that we have kind of reset momentum on longer time frames here. In the article I wrote this week for Espresso, I mentioned specifically the 9 close 0 SMA 5 on the weekly chart and the 50 RSI mark on the weekly chart. And those have both been flipped, barely, but they're flipped. And so far, it's still holding as of right now in this moment. So that's kind of the first line that we need to reestablish, backtest that, and then we can make another move towards 28,000. Above that, things could get pretty interesting. So the last 3 times in 2023 that Bitcoin flipped the 50 RSI mark on the weekly chart, as well as that 9 close 0 SMA 5 line, is when it jumped from 17,000 to over 23,000 in 1 week. The next was right after Silicon Valley Bank's crash, which sent it from 19,000 to 28,000 a week. And the third was following BlackRock's ETF announcement, which sent it from 24,000 to over 31,000 in a week. So the fuel is there. Obviously, there's still a lot of short interest, people in disbelief of this rally, as I am too, to be quite honest with you, until we get back above 28,000. So it's kind of the moment of max risk and potentially max reward if you're bold enough to stand in front of the dollar freight train here, which I'm not ashamed to say I am not.
It sounds like a dangerous place to be on those tracks. Tell me, last week, as I mentioned, we were definitely saying the party's over. Then we see this move up. Was this driven by spot? Was this driven by option futures activity? Where is the momentum coming from?
There was a lot of spot initially. As soon as you saw the legacy markets open on Sunday night, there was a huge surge in spot volume, which isn't unusual given the amount of short interest. And we saw a huge clearing of open interest, which just meant shorts got squeezed. And they got squeezed directly into resistance, which is about the most painful thing that can happen as a short seller. They just didn't hide their liquidation points cleverly right at the 200-day, which obviously got wicked through and then reversed. It's kind of your typical. It's not unusual to see before a big down move is kind of a bearish retest of the 200-day as we saw in the reversal. So it would need to make up that ground it lost yesterday. It would need to get back above 28,000 and preferably during the New York sessions as they kind of drive trend. Ben made a nice tweet about that this morning. And what we see typically is New York will drive the price action, and we need to see kind of bidding from the large institutions there, and they do so between the hours of 9:30 and 4 o'clock Eastern time. So as of now, there's been a little interest from them. Maybe it could reverse into the end of day or end of the week, but very much on borrowed time, and things are not looking great when you value where Bitcoin is relative to DXY at these levels.
I was going to ask, that was my next question. What's your likelihood that Dixie starts to slow down here?
I think it's all dependent on some form of intervention, liquidity injections to stop what's going on in bonds or FX markets. Something there to prevent legacy systems from coming under stress. Like I mentioned in the lead there is that we see the VIX starting to break out, which is really dangerous for legacy markets, and that could cause a lot of chaos. So maybe there's the outside chance that, they step in to prevent things before they get to really crisis levels. But obviously your downside, if something like that were to happen, is who knows where we might be looking at, lower than 2022 lows, post FTX lows if things get bad enough. So you're really gambling here if you're betting on that, essentially, if you want to be long in this situation, I believe. Or perhaps another catalyst like a spot approval, which doesn't seem likely, but you never know.
Right. Yeah. So we're looking for a black or white swan to sort of change the movement of the market.
Indeed.
Okay. Ray, I want to ask you, bring you up here. What are your thoughts? I think you posted something on Twitter about sort of seeing some of the nice price action, seeing some spot buying. Is your view and analysis similar to what JJ shared? Or is there anything else that you would counter what he's saying?
I don't feel depressed, and the price action's still within the same range that we've seen for months, and the same dynamic of longs getting cleared out, shorts getting cleared out at resistance or support within that range continues. I thought it was notable that spot volumes were driving price to wherever it terminated the other day. I think it was around 28.5 or 28.6K. And I've lost my thought for a second. Sorry about that.
So it was notable that we had some spot volume.
The thing is with the spot volume, in my opinion,
needs to clear 29K, 30K, close there with a few daily candles, turn it into support. That didn't happen. So what do we expect? Selling and return to range, basically?
Mm-hmm.
You'll see people buy spot and kind of lead those liquidations, and then there's no follow through after the large liquidations like we saw. And that kind of signals to me that it may have just been a squeeze and they were just grabbing liquidity where it existed, which I'm pretty cautious of here to get bullish on a short-term squeeze type scenario.
And it all seemed to happen at the same time. We had the news that the U.S. government had a plan of action to not shut down for 45 days. So it seemed to be an impulse move at markets, right?
Indeed.
So,
Yeah. And then there was the Ethereum futures ETFs launching on that Monday also.
Right. Yeah. So we had a few bullish signals, if you will, coming out from the market. Ben, I want to bring you in here because you're oftentimes looking more at the papers coming out of the Fed or the BIS, thinking about some of the white swans that JJ was mentioning, intervention, which I guess is coming off of a black swan and something cracks, or looking to just create more liquidity in the market. Last week, we talked about changes that they may make for banks, so whether or not they can use their collateral as some liquidity. What's your perspective that we see some of those changes in this quarter?
I think it just comes down to when those cracks get large enough that we're all witnessing them. And if we look at how much dry powder sitting in the repo market, it's still pretty healthy. I mean, they've been drawing that down considerably over the last 4 or 5 months now. So once those cracks do emerge, I would see them jump in pretty quickly with changing some of the things like collateral requirements at banks, which in doing so, they would treat treasuries like a non-risk asset, so they won't have to actually hold much backing on their balance sheet to really compensate for that. But the one piece that I would draw attention to is we look at the yield curve, we look at long-term treasuries, and those have been climbing considerably. And a lot of this has to just do with the amount of debt issuance coming out of the treasury right now, and we should not expect a slowdown. Like this move, and everyone's like, well, when's it going to stop? When's it going to stop? I think JP Morgan. I think JJ went ahead and dropped a post there about Jamie Dimon, I think, saying 7% was his target. And I know I sent it to some people, like they think 5% is going to be the max. And I was like, nah, just keep going. Just keep going. Don't try to time it. Don't try to expect it. And the Fed's going to jump at the first moment of any fractures they see. And that'll just keep eating up dollars too, which kind of leads to all this strength in the dollar of late.
Right. The vacuum that is the Dixie. All right, JJ, I want to bring it back to you, kind of final statement on the market update. Are there any other signals that you're looking at that may be a counter trend to what you just shared as your thesis?
I mean, the Dixie is at extreme overbought levels if you're looking at it technically, but obviously it's not a technically driven asset. It's kind of driven by Fed policy, right? And these things can just go. I mean, trying to call a top on it, it's a fool's errand. I'm sure there's been a lot of people that have gotten run over the past couple months thinking that's topped out. So you just have to wait and see for something there. And I think you'll see it in the charts. It'll probably retest its 200-day at some point, which is around 103, but that could just keep climbing. There's no reason to believe this is going to stop now. You'd have to be pretty bold to bet otherwise, there would have to be some catalyst, which doesn't, like the jobs report this morning was strong, which just keeps adding DXY strength as it gives the Fed more room to tighten, and we might get up to that 7% JP Morgan level. It would take severe breakage in legacy markets, something like we saw in 2020 or the SVB collapse back in March, to kind of draw some action there and bring in liquidity to markets. I think that's what you're waiting for, is a catalyst like that.
Yeah. Okay. So I think to summarize here, this is a dangerous spot to be in, to just be going in long. We've got a lot of pressure coming in from the macro environment that suggests that we could see some downside sooner rather than later. And until you start to see some actual cracks in the macro space, markets starting to break, like the real estate market or commercial credit, you can expect that the Fed has enough runway to continue their hikes and keep the higher for longer. So something to keep in mind for your portfolio. As I'd like to remind everybody, keep some dry powder, be smart, be safe. And with that, let's move on to the beta play for this week. I'm excited for this one. This week, we're going to be doing Polygon. So for those who are joining us for the first time, I know we have several new listeners from last week, but this is our fourth installment of beta plays, where we analyze market opportunities and ask, will they outperform the benchmark in the coming cycle? And we do this by evaluating three categories: network strength, monetary fundamentals, and technical analysis. And after we review the data, I'm going to ask each of the team members to share their views on whether they expect the play to outperform. And for today, the benchmark is Ethereum, and we're asking if Polygon will be a beta play. And so far, we've done Arbitrum, Cosmos, and Avalanche. If you're interested in those, which are, again, similar analysis, really good data, I suggest listening to the last three episodes. Now, Cody's going to do a deep dive of the platform, but allow me to just unpack it a little bit. Directly from their website, Polygon is a transaction scaling solution that creates the ability to process thousands of transactions quickly across multiple blockchains and settle to a highly secure base chain such as Ethereum. They go on to say, with this tagline, the value layer of the internet, the fundamental protocol that allows anyone to create and exchange value, powered by zero knowledge technology. And the native token for the network is matic. There is a proposal to change it to something else. We'll see if we get into that today. But matic is used to access apps in the blockchain and used for staking, the consensus model for Polygon. So that's a summary of it. Cody, I'm going to bring you up and you can go into the network strength. You there, Cody?
Yep, right here.
All right, take it away.
So, I'm going to first start with the tech, because I think Polygon is doing quite interesting things, like they're trying to launch into new directions. First, we have the Polygon chain. That's the chain that we all used. It's the main chain they have now, like with all the TVL there. And it's basically a run-of-the-mill EVM blockchain. It's connected with a bridge to Ethereum, but it's not a roll-up. It doesn't settle on Ethereum or anything like that. But they have announced more than one roll-up, and they have launched one as of now. The Polygon ZK EVM. That's an EVM roll-up that is enabled through ZK technology. This is on mainnet right now. It doesn't have much activity yet, probably because people don't expect an airdrop from it, but it is up and working. And they also have another rollup coming called Maiden, which is another ZK rollup, but it's not running on the EVM. It's running on the Maiden VM, and they wanted to try this because they want to be as performant as possible, and apparently the EVM is not the best solution for that, according to them. And finally, yes.
Cody, can I ask a question? So for someone who is not familiar with the Polygon infrastructure and architecture, explain to them the value of ZK EVM, because you just mentioned they have several different chains and how they connect to Ethereum. What's the value there?
The idea is the ZK technology will enable much higher throughput. It would also enable like ZK fraud proofs. Basically, you can prove that something is true or has happened without revealing the full history of a chain, and a bunch of other different things that would be better than the current technology, right? The thing is
added privacy and better throughput. Is that a good summary?
Yeah, added privacy and better more performant tech.
Okay, fantastic.
The thing is, it is not a fully developed technology. That's why I think Polygon has launched a slew of different, they're trying to launch a slew of different solutions, and most of them they just acquired. They raised and they made quite a lot of money in the previous bull, and they have used that for M&A, and quite well, to be honest. And the last thing that I think it's interesting that they're going into is they are becoming a sort of atom for a Polygon network of chains. The new change of the token that you, Marconi, mentioned, they want to change from matic to POL, and this would be used to secure different ZK-enabled decks, and they all would be sitting similar to like what Avalanche was doing in a sort of supernet, and they have announced a few that are joining, like Canto and IMX and things like that. So a lot of things to look into. Or to look forward into Polygon's horizon, and yeah, if they manage to like build any of them successfully, they can like really become very successful in the next pool. Like, yeah, like I think quite a few things that can be quite, yeah, like
Strong from a technology perspective. Again,
Yeah,
I want to
correct.
explain to the audience, for those who didn't listen to our Atom discussion and maybe aren't familiar with the architecture, what's the value of having that sort of messaging capability across chains or within the ecosystem?
Yeah, so the idea is that you can have different chains. Each of them are built purposefully to what they want to focus on. You can have one that is focused on gaming. You can have one that is focused on DeFi. You can have another one for NFTs. And each one of them would have different. They will have different choices. So some of them will need better throughput. Some of them would not need better throughput, but maybe the social consensus layer would need to be stronger. Some of them might favor more decentralization, so the hardware requirements to run a node would be lower. Really anything that you want to build, and they are giving like a toolkit for other teams to build these Polygon ZK-enabled chains. But yeah, not as of now, none have been deployed, but there have been a few announcements of even like current chains that are migrating to this new supernet from Polygon.
So from your evaluation, strong technology, kind of
Yeah,
incorporating some of the
it's
best
quite.
out there.
They did buy out quite some of the strongest teams in ZK tech. So yeah, it's not surprising that they're releasing some really interesting things.
Okay. So that's a good thumbs up. Okay. What else do you have that you want to share with the audience?
So yeah, like we need to focus on the Polygon main chain. It's called Polygon POS or proof of stake, and it is basically an EVM sidechain. It runs EVM, and it was really successful during the bull, and it showed up until like 80 or 100 TPS or transactions per second during the bull. It was running like 10 million transactions a day, which is many more than Ethereum does. Ethereum right now does like 10 TPS a day, so around like a million. And the transactions per second for matic have since calmed down, but it is still quite an active chain, sitting at around 20 transactions per second a day. There's a lot of rollups out there that are sitting at less than 10 or less than 5. So it's definitely probably the most active EVM chain aside from Ethereum.
And really, it's the idea is that it's an L2, that it's creating that scalability for the Ethereum base chain.
Yeah, the thing is, it launched before really rollup technology was enabled. So they announced that they were aligned with Ethereum, but it's sitting as its own separate chain. So it is connected through a bridge, but right now it is not a rollup, and they are trying to, or they are launching rollups that are actually connected to Ethereum. But the main one for now is not, and will likely never be. Or like at least they haven't announced anything in this particular regard. But they do have a lot of the projects that run on Ethereum. A lot of the capital that went on to Polygon came from Ethereum, because they basically launched before any rollups could launch. So yeah, a lot of the capital that wanted to transact on Ethereum and couldn't moved on to matic. So it is not surprising that even now they have like 100 million in TVL, so sitting at number 5. And for stables also as well, they're sitting at number 6 from all chains at 1.3 bill. And active users, they have as many active users as Ethereum, 300K. And yeah, like sitting at number 3 in protocols in DeFi Llama at almost 500. So it's a really active chain. Even now, like it saw its peak as pretty much everything during the 2021 bull, but as opposed to some other chains like Avalanche that we saw last week, it is like it has sustained a lot of the activity.
Okay. So the network strength has continued in the bear market. Obviously, everyone has seen a pullback in terms of activity, but it's continued, I guess, relative to the other chains, it's continued to be fairly strong.
Yes, correct.
Okay.
Just as a last point, the fees are also much lower. So just as a like if you wanted to post 1 kilobyte of data to Ethereum, you would have to pay around $15. If you want to post 1 kilobyte of data to Polygon, you need to pay around 4 cents. So much cheaper and running at higher throughput as well. So it's not as good as other like chains like Solana or Sui or Raptors, but it's definitely the most performant EVM chain out there right now.
Okay. Good to know. So anything else from network strength that you want to share before we move on to monetary strategy?
That's it for me.
Okay. Thank you, Cody. All right, Ben, we're moving on to monetary strategy. Unpack what it looks like for Matic and Polygon.
Yes, sir. And Cody, thanks for that breakdown. That was some good stuff right there. And when it comes to the analysis here on terms of monetary policy and the fundamentals happening with its supply, I did not take into consideration the Matic to Pole upgrade that's coming in the horizon. If anything, just kind of hold that in the back of your head, reserve that thought for kind of my takeaway here. But with that, I'll kind of dive in. So most of my conversation when it comes to Polygon today is really just going to sit on the token supply because I do believe it's a hurdle that Polygon is overcoming. So before I get to it, let's just get the rating out of the way. I've given Polygon a rating of 6.5, which is higher than the 5.5 I gave Cosmos and well above the 3.5 I gave Avalanche. And while this is lower than the 8 I gave Ethereum, I think I might surprise some folks near the end of this section.
Surprise, because we're expecting you to not say this is a beta play. Are you foretelling? Are you telling us that you actually have something up your sleeve?
Yes, maybe. But let's see why. I think that's
why.
Yes, let's do that. So as a reminder, I like to view supply in terms of how a network can absorb new supply or how it will react when higher demand does show up. Again, all relative to the token's price. And so this is done. The way I do this is by assessing a token's usage outside of just tokens sitting in a wallet. So the more forms of higher usage of the token, like staking or providing liquidity or using it as collateral, the better the ability for the network to absorb any additional supply and also its reaction to any uptick in demand. So with that out of the way, Matic has a supply cap of 10 billion, and there are some conflicting figures here on whether the full 10 billion is circulating or 93% of that figure is circulating. So we're somewhere in between. We're not really getting clarity on all the data providers on what that figure is. What is that source of truth in a world where blockchains are supposed to be that source of truth? I kind of find that interesting that there's so many different figures out there. But regardless, the last time we did have a major change in supply was pretty recently. It was back in August. 1.4 billion of the supply got unlocked. So that's a major shock in terms of supply. And it's why I'm spending most of the time diving into this in terms of where those tokens went and how they got absorbed throughout the network. So to start off just real quick with the price action, which I think is kind of important here because we had that unlock happen back in August. Since then, ETH is down about 10%. Meanwhile, Matic is down 17% over the same time period. So some of these supply dynamics of this recent unlock is playing a role here when it comes to price in the market. So with such a large supply hitting that market, we want to see it get used throughout the network. I kind of alluded to some of those ways earlier. And the main form of usage that we ended up seeing is staking, which isn't surprising. About 100 million Matic got staked on the heels of that unlock. So now that figure is about 3.6 billion in terms of the amount of Matic that is staked on the network. It's gone down a little bit in the past few weeks, but it's still a net positive sinkhole for all the new supply. Another form of where that token went was for liquid staking tokens like Matic X. And a lot of that supply ended up on Aave V3 for lending purposes. About 10 million ended up on Aave, which again, that's a pretty decent chunk of Matic being moved over there. Compound holds a lot of Matic as well. We didn't see much change there since the recent unlock. Same thing with QuickSwap. which is another decent destination for matic. Lido does have a liquid staking solution for matic with about 135 million sitting on Ethereum and 100 million sitting on Polygon. So this is a good chunk of supply. I don't know what the uptick was with the recent unlock, but just seeing that amount of tokens sitting over there is a good sign. And so with that, we can see that the new unlock that happened, we did see a lot of those tokens go into higher forms of usage throughout the network, which I think it's a good sign, but obviously we didn't see all of the supply kind of get absorbed throughout the network.
Okay, so really, what's your main takeaway here? I mean, we're seeing some absorption. It sounds like maybe we're getting close to the absorption taking care of most of that excess supply. But what is your key takeaway as you do that analysis?
Yeah, so we've seen price respond a good bit, and so I believe we are through kind of a good chunk of this overhang that took place with the recent unlock, but not likely all of it. But since we are done with matic unlocks moving forward, we won't really have those supply shocks as we move forward and hopefully into a new bull cycle. So it's more about getting through the current overhang. And for that reason, I do like how the supply of matic looks moving forward. Once it gets through this recent overhang and as it starts to move towards higher forms of usage once activity returns.
Okay, so walk us through what you're looking at moving forward. You start off your analysis saying there may be something hiding here that could give you excitement or promise for the future. So walk us through what you're looking for as matic moves forward, as it moves into poll. And well, I guess you're not necessarily analyzing poll, but just in general, what are you looking at?
Yeah, so when it comes to monetary analysis, I do look at the token's usage, and then I look into credit markets and also kind of what is happening in terms of the economy itself on the network. And so here, when we look at credit markets, I find that it looks pretty good. I mean, staking matic right now is yielding just over 5% according to staking rewards. Stake matic from Lido is just below that. So if a user wants to go ahead and stake matic, they're not going to earn as high of a reward as just staking native tokens itself to the network, but they can go out and take on more risk to earn a higher yield. And so that yield is compensating them for that additional risk that they would be taking on, which is a logical way of kind of essentially the credit market should be working. Lending yields isn't very high right now. It's around 3%. It's tough for those yields to be high. And lending is a substantial sink for matic supply. So it is worth keeping an eye on that supply, that if it does start to exit, essentially Aave V3, that would be one thing to note because that would potentially be a lot of supply that would hit the market. But overall, I do like how the credit markets are functioning. It's much more logical than we saw with Avalanche, for instance, and Cosmos.
Okay, so the credit markets are really a bright spot here for the listeners can continue to look into that, do a deeper dive, and continue to monitor that because that could be a source of value for the token.
Yeah, and just that the fact that they're operating logically just means that when activity does resume, any user that's holding matic is likely to seek out those other forms of locking up a token or providing liquidity because the yields are kind of what they should be in terms of a risk-adjusted basis. But also what I like seeing is in terms of the network itself, I like to see that the amount of contracts that are being deployed on the proof of stake chain, which is the main Polygon chain, hasn't had a drawdown as we've seen in a lot of different layer ones of late. So that means there is continued activity taking place and solutions will be continually being brought to the forefront that would again lead to additional forms of usage for the token. We've seen fees. They haven't really had much of a drawdown either. So the amount of fees is sitting around 30,000 to 40,000 matic a day. And this is also contributing to some of the burn of matic tokens. And so as we see activity start to return, the burn will start to creep up, the fees will creep up, and then you'll see the tokens start to kind of propagate throughout the ecosystem and act as sinkholes, which is good. So right here we have a good base taking place on Polygon. We don't see a lot of supply coming in the future. We have a little bit of an overhang happening right now, but I think we get through that pretty easily. And once we get through that, I think this token and this network is primed, so to speak.
Primed means, I guess a question for you I'll ask now because I know we're going to get at the very end, get everyone's view. Do you see your original rating be able to go up if the credit markets continue to function as they do and they continue to build out their ecosystem.
Yeah, so when it comes down to Polygon, I'll go ahead and say my main takeaway here, which is as activity starts to pick back up on Ethereum and all the users start to look for alternative solutions in terms of less gas fees per transaction, because we all saw in the last bull run that all the users essentially fled and went to other solutions. And Polygon here is sitting there ready to take in all these users as they start to come in. So while Ethereum, I think, is likely to, maybe not in the next month, but the first leg of the bull market, I think Ethereum might be outperforming. I think Polygon is going to really kind of come out strong on the last half.
Okay. Good summary. All right. Anything last words you want to have on the monetary policy before we look at price?
Nothing here. Just in terms of poll, we'll see how that starts to unfold and possibly revisit the monetary side of things when we see poll get rolled out.
Excellent. All right. JJ, I want to bring you up, talk price technicals. Obviously, I'm expecting the chart to look a little sad given that we've been in the bear market as long as we have, but kind of walk us through what you're looking at here and just unpack it for the audience.
Well, it does look sad if you're measuring against the US dollar pair, but there's actually some signs of momentum building. So kind of one of the proprietary metrics that we put out, which takes a blend of different moving averages. Right now versus the US dollar, that's showing actually like 6 out of 7 or so, or I'm sorry, 6 or 7 or so out of 10 in terms of strength. So it's kind of building some momentum there. Versus the dollar pair, the only thing we haven't seen to confirm that we're at and near a bottom yet is volume. So obviously you need volume to confirm price and that there's interest at certain price levels, and that hasn't come in yet. And that's obviously a factor due to liquidity in markets in general. So when the dollar's as strong as it is, you're just not going to be seeing a whole lot of people rushing out to buying matic. That said, like there's a chance like it could go back to the 2022 lows if obviously the dollar keeps going stronger. It could wick below there. So I wouldn't be rushing out to buy it just yet, but be mindful that there is momentum building there. And then to add confluence to what Ben and Cody were saying in terms of just its strength as a beta play, particularly versus ETH, it looks great versus ETH. So it's kind of breaking above key moving averages there. It shows some real signs of bottoming out versus the ETH pair. And I think if we do get another bull run, risk appetites return, even on a lower time frame, I think this could outpace ETH to the upside pretty considerably there.
All right. That's some good news for long-term bag holders that are looking to outperform Ethereum.
Yeah, they need a win.
They do. All right, good analysis and breakdown there. Anything else you want to add? Because I do want to bring Ray up here to give his thoughts more from a market point of view.
Nothing in particular. It's just knowing the macro environment you're in, I guess, with things like this. So when the dollar's running hot, you're really gambling if you're running out, hoping to get a huge return on matic. But it's one of those things that when the dollar eventually does go down, you'll see this kind of fly, and that's when it would have the potential to do some pretty massive single-day numbers. So strong beta play.
Okay, excellent. All right, Ray, I want to bring you up here. What's your perspective here? Because I know you're looking at more of a macro view, kind of summarizing everything from the outside the market's point of view. So tell us what you're thinking.
Well, it was good to hear Ben and Cody's point of view, looking at the actual network, its fundamentals, what might make it attractive in the next bull run, and the technological capacity of the actual blockchain. That was positive to hear. Because my point of view on this token is pretty dim and grim, so it'll provide listeners with like the ability to contrast.
I was about to say we like the different perspectives. So yeah, unpack it for us.
Yeah, so from a pure technical perspective, on the weekly time frame, Paul, matic, whatever you want to call it, it looks like a hot steaming pile of you know what to me, and I wouldn't touch it with a 10-foot pole given the current headwinds against the crypto sector. Now, has this project historically had impressive partnerships? Sure. Does the blockchain work? Yeah, it's great. Were they able to deliver on their blockchain-based gaming thesis, which was a huge thing in the last bull run? It was a massive price catalyst for AVAX and Avalanche. No, they did not. Have any of these partnerships borne fruit that have reflected positively on the token price over a longer time frame? No. And is the project the Binance incubated accelerator launchpad project? Yes, it is. So am I optimistic on matic in the short term when like compared against other investment opportunities in the crypto space? Not at all. The chart shows on the weekly time frame the price is almost essentially retraced to zero, i.e. it trades near its April 2021 pre-bull market breakout price. So roll back 2 years and this token is trading at the same price that it was 2 years ago. That's just revolutionary, isn't it? So, with the exception of last week, we've got weekly lower highs since February of 2023. Investors would need to see this trend reverse and see price set a higher high or a higher low above $1.20, which is 4 cents above the 61.8 fib retracement level. That level tends to kind of serve as support or resistance on the daily and weekly time frame. So price breakouts tend to be capped there, and that's where swing traders take profits. Price breakdowns tend to bounce at that level, and that's where people who are in a short would exit and go long again, or those that are looking to enter into a position would enter at that 61.8 fib. So that's quite a ways from where price is trading now, but market structure wise, given the headwinds that exist against the crypto sector, and even like on the macro side, any breakout that's taking place from where price is now to that 61.8 level, I don't think is a like major market structure alteration. Is it a nice range to trade? Perhaps, assuming you're not getting stopped out along the way and exploited with exchange fees. But in terms of a complete reversal to convince me that this asset is now in a new trend, I would need to see price trading above $1.20. On the daily chart, it doesn't look that great either. Basically, to me, I just see back-to-back bear flag continuation again and again and again. So with that said, maybe this is a good project. I know I've talked bad about it, but given the current headwinds, I think it's likely to continue struggling to gain traction. There's too many blockchains out there that are all aiming to solve the same problem. They're all carbon copies of each other in a way, and the bear market is sapping project runway away and leading some of these projects to wind down. So let's see which one's the strongest.
Yeah, so I think we have a view there that just doesn't see a lot of momentum, I think, in the near term, right? I think there's a nice perspective there. All right, I want to wrap this up, though, because I want to get everyone's perspective. I think we kind of know where people sit, but I want to hear everyone kind of answer the question, do you think this will be a beta play in the coming cycle? Cody, I'm going to start with you. What's your verdict?
Looking at how well the network has held up and like the possible avenues they have to grow, I have to say yes.
Okay, we got a yes. Ben, I want to ask you the same question. Will it be a beta play in the coming cycle?
No at first, and then a yes.
No, then a yes. Well, that's a way to hedge it.
Yes.
Okay, JJ.
I would say if it survives, obviously the things Ray said, kind of running out of capital, the Binance issues, etc. So if it can make it to whenever the next bull run may start, if that's in the near future, I very much like its chances. So tentative yes.
Tentative yes. All right. I like how everyone's here is hedging. Ray.
I'm going to agree with Ben and say yes and no, because I think there's an opportunity cost to investing in a project where fundamentals aren't the primary driver of price upside or downside. So maybe you get a good ROI in 2, 3, or 4 years, but how do you calculate that, and what did you miss in the meantime?
Okay. All right. Well, there you have it. I think there's a various ways you can look at this. Ray just pointing out there's a cost to putting your capital in here. You need to be contemplating that over the long term versus what other investments you may be making. But then you've also heard from Cody and Ben kind of giving a view that maybe the technology, if it continues to strengthen, they can make improvements. There may be a case for it going as a beta play against Ethereum. All right. So with that, we're going to move on to the next segment. We got Like It or Spike It. Cody, I'm bringing you back. You excited? You got 3 good ones here. Oh, you may be on mute.
Yep, I was. Let's go for it.
Okay, all right. All right, the first one here I think most people know about, but definitely want to hear your perspective. Ethereum Future ETF launches to less than 10 million in combined volume on the first day. Like it or spike it?
Spike it.
Disappointing. All right, walk us through why you're spiking it.
Well, if you look at the BITO, that was like the BTC or Bitcoin futures ETF. It did 200 million in volume in 15 minutes. It did 2 billion in the first 2 days. Now we do 10 million in a day. Like, yes, it is a bear market, yada, yada. It's disappointing as hell. And I think it's maybe foretelling us that like the much expected Bitcoin spot ETF might not be as good as everyone hopes it will be. I think it...
I was going to say, you're foretelling a pretty dismal view if everyone's hanging their hat on the ETF and it comes out and you have pretty low volume.
It wasn't that. I also wasn't expecting it. I think Halperes he runs a crypto hedge fund. He's quite followed on Twitter. He posted a poll just before the ETFs launched, and I think like 50% of the people expected up to like 100 million in the first 2 days, and like 20% between 100 and 200 million, 20% north of 400 million. It did less than 20. Like the day hasn't finished yet, but like it's not gonna be more than that. So yeah, it's sad. It's just not there. There is no interest, and yes, like it is fundamentally different to a spot ETF, and there might not be as much interest towards ETH as towards BTC, but still, I think it should tell us like, hey, maybe there really isn't that much interest right now for crypto coming from people that only have access to ETFs, right? So yeah, I think you could you could see the BTC ETFs as an avenue for liquidity to come in the future. But even if they do launch in the coming months, maybe the liquidity is not there right now.
Okay. And I imagine there's other narratives people could spin. You know, the market isn't as familiar with Ethereum, so they don't really know what this is. You just comment on the fact that it's a future versus a spot. But I think in general, the narrative is that expectations were high and this way underperformed.
Yeah, I think you can spin it as much as you want, but like the reality is it's disappointing.
Okay. All right. Well, let's move on to the next one. Maybe it will brighten our day a little bit more. Frax announces plans to enter real-world asset market and give out yield for Frax like MakerDAO does for DAI. Like it or spike it?
Like it.
All right. Unpack this one for us.
I do have to say that the final plans have not been finalized. I am going off from posts on governance, but I think what they are trying to do is pretty clear by now. Basically, they are trying to copy MakerDAO and offer yield on their stablecoin. For those of you that don't know, Frax Finance has a stablecoin called Frax. Right now, it's the second stablecoin in DeFi after DAI. I think it has around about 700 million circulation compared to like 5.5 billion for DAI. And yeah, right now there's no difference to it, there's not much of a difference to DAI. When it launched, Frax was a semi-algorithm stablecoin that was like, it was partly backed by USDC, partly backed by Frax. After Luna collapsed, I think they took the wise decision to change that. Now it's only backed by USDC, but they do have some avenues to offer yield, and they have up until now offered that yield to Frax stakers. This yield come from some of the different DeFi avenues they have. They have a lending market, they have a DEX market, and they get fees from that and get them back to the token holders. And the idea right now, seeing how MakerDAO offers yield on DAI, is to do the same. Basically, just create a Frax savings rate of sort, offer the chance to Frax holders to stake that Frax for S-Frax and earn yield. And that yield would come, again, from the DeFi avenues they have right now, but mainly from real-world assets. They have incorporated a company called Finrest PBC that would act as the off-chain custodian, and they would hold bonds and other, mainly US bonds, and pass that yield on to Frax holders. And yeah, I think they are, since they have a little bit more source of yield than just real world assets, they might be able to give higher yields than Maker, which is kind of the play that they did for their LSD solution. They offered a slightly higher yield quite a high, much higher yield in the beginning than other LSD providers like Lido and Rocket Pool, and they grew quite a lot. Now the yield has come down and they are not growing as much, but I think they're trying to run the same playbook. Like, okay, we're the second or the third ones in the field, but we're gonna offer you a higher yield, so try and get the market to come to them.
Okay. Well, it sounds positive, and this just continues to show the strength of people wanting to get into US dollar denominated debt, if I'm not mistaken, right? You mentioned that they're doing bonds.
Yeah, absolutely. That would be the main avenue. I think at some point, Gary just realizes that people are doing this and he's not too happy about it. But in the meantime, let's
enjoy it, right?
let's enjoy the deal, yeah.
All right, we got to like it for Frax. All right, last one we got today. Monad announces the most performant EVM architecture to date. That's a big statement. Like it or spike it?
Like it.
All right. If you liked it and it's bold, I want to hear your justification for this one.
I mean, to be fair, the most performant EVM to date comes from them. That's their words. But if they execute on what they have announced, it will likely be. The EVM has some design choices that are genuinely not great when it comes to performance. Some of the main ones would be like the lack of parallelization. That's it. You can only execute one command at a time. So like if I want to do a transaction in Ethereum, I have to do my transaction, and then you can do your transaction, and then Ben can do another transaction. So they have to happen in sequence. So that's not great. Most computers don't have to do that, and for a blockchain to have to do that, if you want to run smart contracts and whatnot, it's just gonna be not as performant as one that can. And right now, Solana, Sui, Aptos, some other chains can do that, but there's not a single EVM that can. So yeah, that's one of the main things. And the guys at Monad were like, okay, like let's keep on building on the EVM because a lot of capital in crypto is tied to Ethereum and its view of what crypto should be. But let's try and make this as performant as possible. For them to do this, they cannot launch as a rollup. They're launching as their own chain, but they're building upon the EVM. They're redesigning quite a few things, and like according to them, there's 4 main areas that they're improving on. The first one is the consensus algorithm. They are creating a new one that would be more performant, faster block times, and it would also separate consensus from execution. The second one, they're building another client written from scratch in C++ and Rust for greater performance. Third one, as I mentioned previously, parallel execution. You can have many transactions happen at the same time in parallel. And the last one would be they are creating a specific database called MonadDB optimized for Ethereum data storage or state storage, sorry. And according to them, this could get the TPS for the EVM up to like 10,000, which is numbers that Solana and Sui have, but other EVMs can only dream of. As we said before, like the most performant EVM right now probably is Polygon, which in the last poll picked at around 100 TPS, and that's the most we've seen on mainnet. We have seen higher numbers in testnet, and like if there's only like a couple people running a testnet chain, but like 10,000 TPS would be like 100 times better than Polygon, 1,000 times better than what Ethereum is doing right now.
Okay, Cody, I want to ask a question here. It's always great to see the advancements, the technology maturing, becoming more advanced. That's fantastic. But thinking back to our conversation about Polygon, it feels as if it's overbuilt, right, for the amount of traffic that's going on it today. Is this the real main problem that they should be addressing? Is this going to solve the issues of adoption?
I understand where you're coming from. At the same time, there's a lot of applications that will not come unless they are able to do so. So unless the developers have the chance of creating certain things that they want to create, which the current EVM likely doesn't allow them to, then yeah, they won't, and that activity will not come. So yeah, at some point you will have created a bunch of different chains that are very performant and no one is really using them, and some of them will die off. But you have to create those first for developers to be able to build on them, right?
Okay.
And I think this has been a long time coming, and I'm really happy that someone is building upon the EVM, but really like tackling some of the biggest issues that it faces.
Okay, no, that's a good perspective for anyone who's out there. It's asking, I think, the skeptic's question of do we need this? You just gave an argument for why this could be revolutionary, assuming that it gets built out, delivered as expected, and we move off testnet.
What we don't need is another like EVM clone, right? Like we don't need that then chains that just copy Ethereum, but people are chains that build up on it and like better it. Then yeah, that we definitely need for sure.
Okay. Well, you heard Cody's perspective, what he's looking at. Thank you, Cody. We got 2 likes, 1 spike. All right. Well, we're going to transition here. We've been talking about EVMs. We've been talking about layer 2s. Now we're bringing it back to the golden boy Bitcoin. Ray, I want to ask, what's on your radar as you're looking towards the halving?
Nothing spectacular on the radar, just kind of continuation of the same evolution and strengthening fundamentals in the mining space. So I was recently at the Bitmain World Digital Mining Summit in Hong Kong, where they released their new Antminer S21 miner. It's revolutionary. It kind of like outpaces all the other ASIC competition out there at the moment. So there's a big build up to it, and a lot of miners were there to just talk about the state of the industry, their books, models for how things are going to look after the halving, so on and so forth. So some basic takeaways that I thought were interesting are that miners have varying expectations on what price will look like after the halving, but all are obviously preparing in their own way. Some expect hash rate to become volatile and for Bitcoin difficulty to drop after the halving, and this would open the door for the most efficient outfits to capitalize on being able to mine Bitcoin while it's easier to do that. While there's a different camp that think that hash rate will remain static, i.e. continue to rise, and that's going to cause some stress on revenue, given the cost of operation remains the same, even as the reward is basically cut in half or chopped down by 50%. So barring an ETF approval or change in economic trend, it's looking more likely that the impact of the halving will be delayed longer than most anticipate. So for Bitcoiners, obviously, price going up is the most important outcome that they're looking for from each of the supply halvings. And I think a positive, in my view, is that this view was confirmed by listed public miners in my panel and in a number of conversations that I had with them, and that in other panels also. So a positive is that a certain cohort of miners are becoming increasingly price agnostic, and they're finding ways to generate revenue outside of pure mining. So they're participating in things like demand response agreements with energy producers and energy distributors. They are curtailing or agreeing to cut off their ASICs at peak demand times and being paid in that time that they turn off. Ordinal inscriptions in the past generated revenues for them, and if those things come back, that's additional revenue. And miners are being really clever with finding ways to reduce their cost. So I find that the companies that are becoming most price agnostic are using at least 30% renewable energy, and they're averaging down their cost per coin. And they're also selling daily rather than building hodl treasuries. So the distress that we've seen in previous years where price and number of Bitcoin mined were like directly related to miners' health and maybe stock price, we're seeing that trend diluted to the extent that now there's miners out there that are mining one Bitcoin for $6,500 or $9,900 like TeraWolf. So after the halving, because these outfits are primarily reliant on renewables, or they have fixed power contracts under like the 4 cent per kilowatt rate, we could see like the distress, we could see less distress from those outlets because they're profitable, they're not building massive hodl treasuries, and they're selling daily. So I don't think previously, like, one thing that analysts looked at was cost of production and price riding along price of production. People also looked at like how miners send their mined Bitcoin to exchanges and sell it. Those have been used as kind of like sentiment gauges by bedroom analysts and on-chain sleuths to then forecast what's the sentiment within the market and what does that mean for Bitcoin price. But I think after the halving, you're going to see the impact somewhat delayed by 6 to 9 months, maybe even 12 months, unless, the ETF that everyone's waiting on being approved is approved. And I find that interesting, the research methodology that analysts use to interpret on-chain metrics is going to alter. And if miners can demonstrate, the listed ones, that they're still profitable after the halving, and all the kind of emotional distress and worry about what's going to happen to their stock price after the halving, if they can demonstrate that, hey, we're still profitable, things are okay, we're expanding, then we might see some interest come back to Bitcoin mining stocks, especially if there's still delays on this ETF approval, because we know that Bitcoin mining stocks have kind of been a proxy investment for those that want exposure to Bitcoin but can't invest in it. So
Ray,
those were kind of the major takeaways from the conference.
No, there's a lot there. Sounds like a very good time to be around that industry and be hearing exactly their perspectives. And it sounds like there's a spectrum there. I wanted to ask two questions. One is that it feels as though there's a shift on the narrative for Bitcoin mining, moving from it is draining resources needlessly and bad for the environment to it can be used as a tool for ESG. And whether you agree with ESG or not, the fact that it's changing some of that and used for green, I would say, the example that I always read about is burning flared gas from waste dumps. Did people talk about that as sort of a source of revenue and hope for the adoption here to continue to grow for miners?
Yeah, it's happening. I mean, the adoption's happening at wide scale. The relationships between energy producers, distributors, and miners. I mean, it's growing faster than a 2-year-old, right? But Bitcoin has had a PR problem, and part of that PR problem was the energy consumption narrative. And now a lot of data is coming out from Cambridge and from David Batten, and there's other outlets like Bitcoin Magazine that often write pretty high level articles that kind of highlight how 50% of the Bitcoin network is run off of renewable energy. Bloomberg is also doing the same thing. Jamie Coots over there at Bloomberg Crypto writes a lot about Bitcoin's kind of green narrative and the ESG narrative. So I do think that a lot of that is PR, and it's to change that narrative. And we know that narrative drives trend, and narrative is marketing also. So I actually confronted some Bitcoin miners and told them that, this is all part of your PR narrative. You're pivoting and saying that Bitcoin's a green asset, and that's meant to get you more clients and make the negative constituents that hate Bitcoin shut up. And the guy was like, yeah, that's true. But then at the same time, the embrace of renewable energy is catalyzing infrastructure growth on the Bitcoin mining side and also on the energy producer and distributor side, which I agree with also.
Okay. I think it's a very interesting narrative to continue to monitor, especially for those who have always looked at Bitcoin in one light and, again, consuming energy and not being very green could be a good catalyst. So I think the main takeaway, though, just to summarize it, is that if you're a Bitcoin holder, you're not actively invested in the miners, is that we may see a longer period for price accumulation after the next halving.
Yeah, I think so. Absent a spot ETF approval, and if the same sort of macroeconomic climate and QT environment continues, then I don't really see the supply shock catalyzing some sharp upside move. And all that stuff about Bitcoin leaving exchanges would catalyze a supply shock. I think that's misinterpreted data also, because people are paper trading Bitcoin with perpetual contracts anyway.
Sure. All right. So good for all those out there that are holding Bitcoin and making some moves or thinking about what you're going to do as the halving works its way into the ecosystem and your expectations. I think you need to be asking yourself how these dynamics will play out. All right. Well, let's get to the last segment because I have an interesting question that I want to be asking the team. We always like to use this sometimes to laugh, but other times in the last couple of episodes, we've asked more, I would say, thoughtful questions. Like in the last one, we were asking where people would invest outside of crypto. I suggest you go listen to that because we had some good responses. But today, the last question is the killer app for crypto money, art, or something else? And by killer app, I mean, what's really going to catalyze this entire industry to achieve its next wave of adoption? So I'm going to go around the room here and ask each of you. Cody, I'm going to start with you. When you think about the killer app, is it crypto money, art, or is it something else?
Right now, it's stablecoins. I think it has been proven time and time again.
And by stablecoins, it's not just the stability of price. I think it's access to people that don't have access to the dollars. Would you agree with that statement?
People want to hold dollars.
Which
I
I
want
think
to
is an
hold
interesting
dollars.
narrative.
Look at the chart.
Yeah. No, it's an interesting narrative when people say we don't need the U.S. to continue to grow crypto. And I go, well, it's interesting that everyone wants the dollars. JJ, I want to bring you up. What's your perspective on the killer app for crypto?
I think it's always been money. So if we think back, crypto itself was born out of a broken system. And then you just kind of look at the track things have been on since then. And I think we kind of get distracted and miss the forest from the tree sometimes when it's not happening overnight, but that doesn't mean it's happening. It's just kind of like you think of a revolution, it's similar to evolution. That's always happening. It's just kind of happening very slow, more slow than we would like it to at times. But I'm kind of a believer in the Strauss-Howe generational theory and fourth turning and whatnot. And I think you look at these things and the common system just isn't working for the average person anymore. You look at how things have gone since COVID. Now we have high inflation, high rates by all measures. Life is just getting more and more unaffordable for people. And I don't think that's going to fix itself within the next decade or so. I think these things will probably just keep getting worse, and sooner or later we're going to need an answer to that. And I think crypto somehow, some way fixes this. I don't know if it's Bitcoin or Ethereum in their current forms, but I think somehow at the end of the track there, I think all signs point to decentralization and rethinking of institutions in these ways. So that's kind of
Okay, so you're saying a new money. So Cody's killer app was stable coins, which was tokenized versions of the dollar. Your killer app is a new version of money that works for more people.
Indeed.
Okay. All right, Ben, what's your response to what's the killer app for crypto?
It's tough to refute Cody's there because just look at the charts, look at the market caps of stable coins. It's tough to disagree, but my answer is different. It's the fusion of kind of the social app experience along with kind of the fintech experience. And what kind of led me to this is we built an internal messaging, wall-to-wall messaging system that some of us use on the team. And it's interesting just to kind of start to think of how this evolves to where instead of having to log into Instagram, to Meta, to Twitter, to WhatsApp, and you just go down the list of all these different applications and you have to set up your own profile and you have friends on this one and those friends aren't on this other one. And it's a very siloed experience. And then when you think about how anything can build on top of a wallet, leverage your data, and instead of you having to essentially input everything, it's more of like the application kind of just displaying all the information that's already there. And so your wallet becomes this home base and kind of operating system to any application that's building. And so it just makes life a little bit easier. And then now you embed this automation aspect, especially with the arrival of account abstraction solutions and what that means for kind of the future of what would be fintech solutions. I mean, you can even move money from your wallet to a bank account, which is pretty impactful. I think as those tools start to kind of come to the market, because they are so close at this moment and they've been being built for the past 6 months, it's going to be a killer use case, in my opinion.
Okay, so we got a third version. If you don't agree with Cody, you have an alternative. Again, Ben, you're hedging. I like that. Ray, I'm going to give you the last chance to answer the question. What is the killer app for crypto?
I would just say Bitcoin, but I'll come up with something more innovative. But I mean, Bitcoin is the top performing asset for the last decade, and it's the only one that doesn't do like code revisions and rug people and all that. It's the only one that's actually seeing mass adoption from the institutional side. Also, I guess other than Ethereum, but I will agree with Ben and say that it'll be some sort of app. So for him, he said a social app. And like I'm using Friend Tech still. I like it. Things are growing there. It's revenue positive for me. And it's just a nice experience, assuming they don't rug us. But I agree with Ben that it'll be some sort of social app. I think gaming, we've seen that that gamers don't necessarily like crypto and they don't like blockchain-based gaming, but they really like their tangibles and intangibles in their in-game items, which are essentially NFTs. They like to buy them, they like to sell them, they like them to be platform agnostic. There's a certain kind of like socio-cultural component of being a gamer and getting these different skins and different like gadgets and whatnot in the game. And someone recently equated those digital collectibles to being the exact same thing as NFTs. So whatever crypto project is able to kind of integrate its blockchain on the back end or its token or whatever, if it can make that seamless transition and create a game that's super sticky and something that gets gamers to come and play it, or if one of these companies can partner with one of the major gaming studios already and create something like that, then I think that could be the next killer app for crypto.
Okay. All right. So we've got two different forms of money. We got social and we got Ray really going on Bitcoin. But if he has to, just to be creative, he'll go for another type of app as well, which may be an NFT. Hey, to all you out there listening at this point in the podcast, let us know in the comments what you think is the absolute killer app, if you agree with these guys or if you think it's something else. And with that, we're going to wrap up this week's show. Guys, it's been a banger here. I want to thank my guests here. I've got JJ, Ben, Lilly, Ray, and Cody. Thanks for coming in, dropping all this alpha. As I say every week, and I suggest you do it, go follow these guys on Twitter. They're sharing their information in the time between our podcasts. So you get a lot of great alpha if you're reading them. Also, you can check out the Espresso newsletter where several of our guests always publish their thoughts. But with that, we're going to wrap it up. I did want to mention again that we are going to be coming back next week for the first time with our video, which is going to be exciting. You're going to see our faces. You're going to see our charts. You're going to see everything that you've always wanted to think about and whatever's in your imagination. So definitely hit the like and subscribe button so you can come back next week. And with that, I'll give my closing statement as I always do. The markets remain difficult to understand and to forecast. So stay safe out there. Keep some dry powder. Rethink your strategies. Think what these guys shared today. Think about how that reflects on your portfolio so you're not APN like the rest of the market and making decisions too quickly. There's plenty of time. The opportunities will come. And with that, I will sign off. This is Marconi White. You have a great week. We'll see you next time.